Good day, everyone, and thank you for joining us. Our first Cogent Live presenter of the day will be Chief Financial Officer Sean Wallace. Sean joined Cogent last year as CFO and has been a financial professional for more than 30 years, including being head of JP Morgan's investment bank in Asia Pacific and head of Standard Chartered's wholesale bank on a global basis. In those roles, he's lived in Hong Kong and Singapore for 15 years. Prior to those roles, he was a telecom banker where he worked with Dave Schaefer in the 1990s. Sean is thrilled to be a part of the Cogent team and is impressed by the discipline, innovation, and bright future of Cogent. He hopes to further help Cogent raise its strong profile with investors and build its renewable platform beyond the solar array, which is currently under construction in Pasadena. On your screen, you have the ability to engage Mr. Wallace by contributing a question at any time. Submitted questions will be answered at the conclusion of his presentation. This session is being recorded and will be available via Cogent's website, www.cogentco.com, next week. Mr. Wallace, thank you for being with us today. Let's begin.
Rusty, thank you very much. And I'm thrilled to be able to speak to potential customers, investors, real estate partners, in the audience. And when I was asked to speak, I thought it was a great opportunity because I get this question from customers and other potential partners all the time. What is it like to be a counterparty with Cogent? So I'm going to talk a little bit about the history of the company, its financial profile, talk a little bit about its performance as a service provider, and talk a little bit about the culture of the place. This is a phenomenal organization. It executes incredibly well. And you should be thrilled. I think if you're a future customer or a future partner, you're going to be doing business with a great organization. So let me just go to the first slide, second slide here. Talk about the history. So Cogent was founded in the sort of last part of the last century by Dave Schaefer, who is an entrepreneur in telecom and real estate and done a variety of different activities. He's an incredibly bright guy. What I like to tell people is that Dave, who's an unbelievably hard worker, is an entrepreneur who is a subject matter expert in virtually every topic that he gets into. So whether you're the CFO talking about a bond financing or you're the head of IT, Dave is there with a well-informed and important view. And I think that's a lot of the character and the success of the organization is Dave's drive. There's no doubt about it. And after 2000, when Dave had the idea to create Cogent, he basically did a ton of work of cleaning up what we're call Internet 1.0 assets. There were billions and billions of dollars raised in the capital markets to build new internet service providers. And after 2000, with the crash of .com, a lot of those entities did not survive. And if you want to know where a lot of them went, quite frankly, Cogent is made up, and at a lot of its base of its employees, some of its customers, and a lot of its technology and assets come from that. The amazing thing is, and a bank put this presentation together, it's in our investor deck. If you look at all the acquisitions that were made and you look at them, in total, Dave bought and Cogent assembled assets that at their peak were worth close to $15 billion. And that's an incredible number, and it showed you the mania of the .com world. But also what's even more incredible is that Cogent paid about $60 million for all those assets. And I've listed a couple of them here. So there's Verio, which was an ISP that was owned by NTT. PSINet, which was a tier 1 ISP. They had their name on the Baltimore Ravens stadium in Baltimore. FirstMark was an international ISP. Carrier One was another international ISP. And there were a variety of others, including Allied Riser, which had a number of agreements in multi-tenant office buildings. But what I think is not only the daring, the incredible value creation by owning these assets at a very, very low price, but what was most important is not only the collection of fiber assets and building rights and customers and data centers. What was really key about this is, one, it moved Cogent from being just a player in the industry to being a tier one ISP. So it had real big status in that. And it also, probably most importantly, is that, and I'll tell you go off on a little tangent. When I came to Cogent and did some due diligence prior, I wanted to know how consolidated this collection of assets were. And what's most amazing is if you go to a bank, you go to a lot of other companies, when they do acquisitions, they don't do the hard yards of integrating operations, integrating accounting. And the first question you ask is, how many general ledgers do you have and how many billing systems do you have? And I would have expected, given all the acquisitions, that there would have been dozens and dozens of billing systems and general ledgers as well. That's not the way Cogent operates. Dave and the team went through and did the hard yards to consolidate all of these operations so that there is one protocol on the technology side. There is a US and European general ledger and billing system. This is one organization. And that is, I think, one of the biggest advantages of this place is that it is not a collection of acquisitions. It is actually one company that operates on an incredibly efficient and professional way. The company went public in 2005, and as I mentioned earlier, had tier one ISP status. So it was an incredible, daring do on the part of Dave to go raise money from venture capitalists and then go through the hard yards of acquiring a series of number of companies all over the United States and other areas, and build the platform for what is Cogent today. Let's go to the next page, Rusty. And you can go look on the left there. That's when Cogent went public in 2005. This has been a steady and very impressive growth in the stock price. We trade on the NASDAQ, CCOI. We're a big company. I tell my friends I work for a company that has a market cap of $3 to $4 billion, and they're quite impressed. The enterprise value is close to $4 billion. That's the equity value of the company plus its debt less its cash. The board and Dave believe that we should be a very, very liquid company. And to that tune, we keep a tremendous amount of excess cash on hand. We typically have around $400 million of cash. At the end of December this year, we had $371.3 million to be exact. We are almost investment grade. We are a Ba3 by Moody's and a B+ by Standard & Poor's on a senior secured rating. And our revenues, again, we're a big, diverse company with international and as well as domestic revenues of $568 million in 2020 and over $200 million in cash flow. So we are a big, well-valued company that is recognized in the NASDAQ by rating agencies, et cetera. And if you peel back the onion and look at some of the characteristics there, one is, as I mentioned, we carry a lot of cash. We're very liquid. If we had to, we could easily pay off our debt. We have an instrument coming due over the next 12 months. We could easily pay that off with cash on hand. And we intend to remain that way because we think liquidity, that type of liquidity provides us the opportunity to continue to invest in our business. It certainly gives us the opportunity if there were opportunities to make acquisitions. We haven't actually made an acquisition since 2005. And it, as a counterparty, it should make you very, very comfortable that we can pay our bills and remain in business. Second, I'll tell you a little story in terms of the predictability of the business. When I got here, we did an analysis called the Monte Carlo analysis, which looks at really the predictability of the business and what could be the impact of outside negative influences. And what's amazing to me is that the bankers who did this analysis for us will tell us this is one of the most predictable, one of the lowest beta, lowest volatile businesses they've ever seen. We have customers who continue to be with us for years and years, and it's because of our service. It's because of the importance of the service that we provide and the quality with which we do that. And that means we're going to be in business for a very, very long time. We have significant, I'm turning the lights on. We have significant access to capital. I can tell you that banks on the commercial banking side, investment banks, equity analysts tell us that we have access to capital in the bank market, in the bond market, in the equity market at almost any time. And we would be able to raise hundreds of millions of dollars of capital on our existing platform today. We have a very broad institutional ownership. If you look at the names of the top 50 owners of the company, it's folks like Fidelity, Vanguard, BlackRock, all folks that are household names, and it's really it emphatically improves the brand of the company. We also have significant inside ownership, and I'll tell you that a lot of the compensation of the senior managers in the company is stock, and the largest individual owner is Dave Schaefer, who I'm happy to say, and I mention this on almost every call, he hasn't sold any shares since the beginning. He is his net worth is tied up in Cogent, and he is focused and makes sure it's going to be a successful organization. And then a final thing I'd say is that we have 17 research analysts. For a company our size, I think that is a function that is a larger number than what you'd expect. I think that is a function of the fact that this is a very interesting company. It has we do a good job, I think, of providing numerical access to our data, our performance statistics, and we have sort of an open kimono attitude on things, so that research analysts like to look at us. And we're a bit of a company that's growing quickly and sees new trends a lot faster than some of the older companies that they follow. So hence, we have a lot of research analysts. Russ, let's go to the next page. So we're a big liquid company with a lot of financial flexibility and strength. And then the other question you should ask yourself is, how does Cogent perform as a service provider? And Net Promoter Scores came out of Bain, the consulting firm, and Harvard Business School, little around 2003. And I'm kind of blown away when I went through and began to ask the questions when I was doing due diligence to come on board of the Net Promoter Scores. I worked at an institution, Standard Chartered, which had a consumer bank, which was obsessed with Net Promoter Scores. We are not at this place. We measure it certainly, but it's not something we live with day to day. But let's give you a little sense of what a Net Promoter Scores is. It looks at customers and basically asks the question, would you recommend this company to a colleague or a friend or someone else who's a potential customer? And it's if you give a 9 or a 10, which means you're pretty enthusiastic about the business, you get a positive number of a 1. If you're 7 to 8, which means you're sort of not so enthusiastic, you get a 0. And if you're 6 or less and you're considered a detractor, you get a -1. So as you look at these names, these are household names. So Comcast, Sprint, Verizon, AT&T, T-Mobile, which are all great companies with phenomenal brand names in their own right. And we compete with these organizations in some way, shape, or form. The ability to get up to a 65 in a Net Promoter Scores is outstanding. And it really shows the focus and the desire of this company to really sell just a couple of products. We sell smart people, we sell dumb pipes to smart people, and we do it incredibly well. And I think some of the aspects of that I'll just walk you through is our SLAs. And in terms of what we say we're going to deliver to clients is materially better than our competition. I looked up our statistics on Bob in the first quarter. We had 0.2% of all the seconds that we delivered were impaired. We have an incredibly reliable network. We have redundancy upon redundancy. And that redundancy is taking something off my screen, provides you the type of reliability that means you're never going to have to really think about worrying about having your internet connectivity. And this is a mission critical service. It's going to be there 24 hours a day, 7 days a week. Unlike a lot of other services, we don't just sell off the internet. We really have a direct sales force. They are highly focused, they're well-trained, and they're there to help you understand your needs and provide what Cogent can provide. And I'd also tell you as a CFO that we continue to invest in our networks. We've spent $60 to $70 million a year on new capacity, growing the ubiquity of our network to tie into carrier neutral data centers. And as a customer, you're going to continue to benefit from that as we've gone from basically a US company to a company that's now in 47 countries, 209 metropolitan markets, and can provide you on-net, reliable on-net service in any of the buildings or data centers that you're into. Let's go to the next page, Rusty. I want to give a little bit of the culture of the place and the experience. One of the things that, again, when I was looking at joining Cogent, and I don't have an exhaustive list here, the list could be very, very long, but I just looked at a couple of the professionals. There are a lot of people who have been here 2 decades. The business has only been around since the beginning of last century, but folks like Tim O'Neill and Jim Bubak and Brad Kumar have incredible experience. It's a very cohesive team that understands how to work together. They finish each other's sentences and a lot of things. And it is just you don't see the level of industry experience in a lot of other companies. You see a lot of folks who move around. This is a company that people enjoy working here, view it as very, very challenging. There's not a lot of bureaucracy. I'll talk a little bit about that. And it's reflected in the senior management team. Cogent is a low-cost operation. There's no corporate jet here. Nobody has a secretary. And as I like to tell investors, when Dave flies from New York to Singapore, he does that every once in a while, he flies coach. The idea is that this is not designed to make management cushy and happy. This is designed to take the money and reinvest it in the network, reinvest it in the customer experience, so that Cogent is the best of the best in providing the service. I'll also tell you that this is an incredibly fast decision-making organization. It's very flat, it's non-bureaucratic. There aren't a lot of memos. Senior executives see issues, they get on a phone, they have meetings, they make decisions, and they move on. And I can tell you, as an experienced senior executive at other organizations, as a customer, you're going to be happy that we continue to do that. You have a problem, we have a challenge with our network. This is an organization that's going to figure out what that problem is, make a decision, and move on very, very quickly. I think that's a huge advantage for this place. I'll give you a story. So, and there are 2 examples of how quickly this organization runs. One is we decided to install a new CRM system. It was rolled out July 1st of last year. I can tell you, typically a CRM system would take anywhere from 6 to 8 months to be in a position where people say it's fully integrated. I think it probably took 2 to 3 months at Cogent. It was a very difficult process. There was a lot of training. There was a lot of debugging, but it is now a phenomenal system that I think is making our sales force even more productive and more effective in dealing with our customers. And I think that's a function of the fact that decisions get made quickly, and that people get together, just make decisions and move on a very quick basis. I'll also tell you that we have a new product called Global Peer Exchange. It was an idea of the management team in the middle of last summer, and within 2 to 3 months, it was already on the desks of salespeople, a new product with new pricing, new protocols already being sold. And I think a final thing that I'll leave you with is how this place makes decisions. It's not intuition. This is a company that collects data, and you'd expect that for a company like this. Collects data, looks at that data almost on a daily basis. There is a big website on the Cogent intranet called Bob, which collects data. It's left to everybody, so there's no hiding the ball there. All that information is out there for management to help make decisions. And so when these fast decisions are made, they're made on a basis that's highly well informed. And again, I think that's another part of the performance culture of the place that makes it so successful. So as a counterparty, go to the next page, Rusty. As a counterparty, Cogent is a company that was formed buying a bunch of really interesting assets. They did a phenomenal job in integrating those assets and making them productive. We are now a large, liquid, well-capitalized, well-recognized institution. We have service level agreements as recognized by our net promoter scores that are as good as anybody in the industry. And I think we have an organization that if you have problems, whether it's as an individual customer or in terms of service, you know you're going to have a very reactive and proactive organization that's going to figure out how to make your customer experience as best as possible. Rusty, that's it for me. I'd be happy to take any questions, but I appreciate the opportunity to speak to you about Cogent as a counterparty.
Great. Thank you, Sean. And for anybody listening, if you'd like to submit a question, please do so now. Sean, there is one question already submitted, and that question is, as the new CFO, what are your short and long-term goals do you have for the organization?
I think on the near term, it was, it's my trying to get my feet under the desk and understand the organization. I wanted to take some time. Dave, I will tell you, Dave Schaefer is unbelievably generous with investors, both on the debt and equity side. I also think he's an incredibly effective executive. So one of the goals I had was to systematically improve the IR function at the company, and not that it had any problems. It's just that it was pulling Dave in a direction that was slowing down the ability of the organization to make decisions and move the thing around. So a lot of that is to provide more leverage for Dave. The second is to develop a financing strategy. We have a couple of bond financings that will probably be done over the near term, and I wanted to figure out what was the optimal way and what was the best refinancing strategy for the company. A third near, and I'll say and long-term requirement was ESG. We are seeing from a series of investors that we are having a greater view, a greater exposure, and trying to figure out how we are operating as an organization. And so one of the areas that Dave has asked me to look into is environmental. I'm working with our lead counsel, John Chang, and Guy Banks, who's in charge of our real estate. We have signed last December to build a solar array in Pasadena, California. It will produce about 2 million kilowatt hours of electricity, and it will reduce probably about 1,000 metric tons of carbon into the air. We consume a lot of electricity every year in our data centers and in running our network, and we aim to systematically figure out how we can reduce the amount of carbon and hopefully improve the operations of the business. So it's proving the IR function, figuring out our financing strategy, and helping with our ESG profile has been some of the near and long-term strategies that I've been focusing on.
Very good, Sean. Thank you very much. There are no further questions in the queue. So at this time, we will conclude the live stream. We want to thank you very much for your time, and we hope everybody listening will join us for our next panel, where Sean will be joined by our financial analyst from MoffettNathanson in the next few minutes. So Sean, thank you very much.
Thanks, Rusty. Thank you, everybody.